Welcome to Factful Finance. Are you ready to start building your financial future, but have no idea where to begin? You're not alone. Many people think that investing is only for the wealthy or experts, but the truth is, anyone can start, and you don't need a PhD in finance to get going. Let's break it down together. Did you know that nearly 80% of Americans don't invest in the stock market? That's a staggering number, especially when you consider that over the long term, the stock market has returned an average of 7% per year after inflation. So why aren't more people taking advantage of this opportunity? If you're feeling overwhelmed or unsure about where to begin, this video is for you. Let's simplify investing piece by piece and make sure you're not left behind. First things first, what is investing? At its core, investing means putting your money into assets that have the potential to grow in value over time. Think of it like planting a tree. You plant the seed, your money, water it, investing regularly, and with time, it grows into something much bigger than what you started with. Now, before you rush into any investment, it's crucial to understand some basic principles. One of the biggest mistakes people make is diving into investments without a strategy. So, here's the first step. Set your financial goals. Are you saving for retirement, a home, or maybe you're looking to grow wealth for future generations? Your goals will determine your strategy. Next up, understand your risk tolerance. Every investment carries some level of risk, whether it's the stock market, bonds, or real estate. The key is to know how much risk you're willing to take without losing sleep at night. For example, if you're young and saving for retirement 30 years down the road, you might be able to take on more risk since you have time to recover from market fluctuations. On the other hand, if you're closer to retirement, you might want to prioritize safer investments. Now, let's talk about the different types of investments you can make. One of the most common types is stocks, which are shares of companies. When you own stocks, you're essentially buying a piece of that company. The good news? Stocks can offer significant returns over time. The bad news? They can be volatile in the short term. So if you're new to investing, it might make sense to start small and diversify. Then there are bonds, debt securities where you lend money to a government or corporation and they pay you interest. Bonds tend to be less risky than stocks, but they also offer lower returns. If you're just getting started, bonds can provide a steady income without the volatility that comes with stocks. And don't forget about real estate, which can be a powerful way to build wealth over time. Whether you're renting out property or investing in real estate investment trusts, REITs, real estate allows you to earn passive income and benefit from property value appreciation. Once you've decided where to invest, you'll need to start small and stay consistent. Here's the beauty of investing: compound interest. The earlier you start, the more time your money has to grow. Even a small monthly contribution to an index fund can compound over time, creating exponential growth. Let's pause for a moment. I know this might sound like a lot and you might be wondering, what if I mess up? The truth is, everyone makes mistakes when they're learning something new. The key is to learn from them and adjust your strategy. For example, Henry started investing in stocks in his 20s but didn't diversify enough. By his 30s, he realized that a broader mix of investments would help him weather market downturns, and he adjusted his portfolio accordingly. Remember, investing is a marathon, not a sprint. It takes time to see results, but with consistency and the right strategy, you'll get there. Here's a quick reminder before we wrap up. This content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. So what's the next step for you? Start by setting your financial goals, assessing your risk tolerance, and choosing your investments. Keep in mind that the earlier you begin, the better. It's not about getting rich overnight, it's about making smart decisions that pay off over time. Which tip resonated most with you? Let me know in the comments. If you're ready to dive deeper into the world of investing, hit that like button and subscribe for more practical financial strategies. And if you found this helpful, you'll love what's coming next. Trust me, you won't want to miss it. Click the video on screen to continue your financial journey.